Hello traders, Nick Shaheen looking at Micron. I have not been a fan of Micron in a long time, and I'm an original fan. So when it was falling out of bed and falling into $30, I was selling $30 puts, and it fell under that. The PE was like 2.9. What is that all about? Not even 3. So I was okay selling a put against the prevailing meme that it's a value trap. I believe the message was a value trap. You can't touch it. And I was like, if you can't touch it when it's down below PE of 3, when can you touch it? So now that it's 30 PE, everybody wants it. So my beef was when it was rallying. I haven't watched CNBC all year, but the last time I saw a snippet somewhere, I think 2 earnings ago, the CEO was saying things have never looked better. So I got curious. So I looked up at the financials, and that was a flat out lie. At least it didn't look like it from the financials. So here's a snippet of the financials from Micron. It's not my data, it's from TradingView. So revenues slacking, falling, profit margins falling, debt levels somewhat rising. Most importantly, cash flow from operations dropping. It's not like alarming, but it's dropping, so how can it be better than ever? Things are not better than ever. Maybe in the industry, but not for you, sir. So the revenues are 20, 30, 23, 21, and now a run rate of 23 and a half. So chip shortage or not, this just started, the chip shortage, and things were already not good going into 2020. So 2019 was already 7 billion less than 2018. Okay, so clearly the message is somewhat murky at best. All right, so I didn't see the reason to chase it to all-time highs or whatever it is, 2 highs, I should say. I haven't checked. And so I shorted it several times here, here, and here. So, and these are true statements because I share them with the folks in the chat room. I say I'm picking a fight with Micron, no particular reason except that I don't believe him, and I would short it via a debit put spread or just naked puts, buying them. So when it falls, I make money. So I didn't time the exits perfectly. I remember leaving money on the table. Like this last stent, if I had held it, I would have made a heck of a lot more. But I'm happy because I got the job done without. I don't short stocks indefinitely, and by just selling them short, because that after what happened with the GME, it's just proof positive that truly the upside loss is unlimited. So when you invest in a stock, traditionally, via buying shares, buying puts, buying calls, whatever options, your maximum loss is 100%. You can lose your money. Versus when you short a stock, traditionally, you really borrow the stock, you sell it, you pocket the money, and then you have to return the shares that you borrowed. So if the stock goes to the moon, you're losing indefinite until you cover your short. So until you deliver on your promise, you're losing money for as long as the stock is rallying. That is unlimited losses that I don't take. Same with selling a naked call. Same story, right? So I don't do that. I just buy a put or buy a put spread, gently shorting something with a finite amount of money. If I'm right, I make money. If I'm wrong, I lose whatever I invested. And that's it. So in this case, what about it now? It down 6% on a bad day in the market, especially bad for the Nasdaq. Now, outsized drop in Micron 6% versus I think 2.5 on the Nasdaq. In fairness, AMD was down 4. I can't see from here. 3.7, 3.8 on Nvidia. So the chips are falling more than the Nasdaq in general, but this one has fallen more than all the 2 other chip companies I've just mentioned. Not comparable chip companies, but chip companies nonetheless. Okay, so if I was long and I look at this and I say, this is my salvation. This is where they bounced last time. I don't disagree, but I think it's more of a zone, and I'll show you. I drew this a while back. I don't know when. Whenever I did, it wasn't today. So why don't I feel very comfortable at this one? Because of the way it ended. It opened at the top and closed at the very bottom into the weakness, and it probably is falling after the market closed. I'm not sure. So it is not inspiring of a impending bounce. Now I do have an alert here, reshort. See that? Because if indeed it loses this, it may accelerate to the downside and try to target something nefarious. But then I looked at it and I was like, maybe I don't want to deal with that because of this potential here. So 75-ish looks like a pivot. it failed, it failed, it failed, and then they sliced through it. They came back, tested it for footing. Look, almost to the penny. Look left. It's almost to the penny where they failed 3 times before. They tested it for footing. So the bulls are confident of this level. So I think it will find support even after another bad day. So if I'm short, I would start to close my shorts. If I'm looking to get long, this is not a bad place to try a long because of the zone. This would ring alarm bells for me losing it, but for all intents and purposes, they already almost did. And there are these 2 candles here and this one. So starting longs here is not that crazy, provided the whole market doesn't crash. By crash, I mean doesn't continue falling. Okay, because these days plus 0.3% is a crash. We don't get we don't get red anymore. So my bone to pick with this one is a lot smaller now because of what just happened. They let go of a lot of froth. And maybe the CEO next time 20%. I don't want to argue with it. I'm not a bad guy. I really want to look up in stocks, but I hate it when I see a situation where it's complete flagrant lie and people buy it. I just don't get it. Look, this is an indecisive candle. It's a doji. Fancy term to say, I don't know. Here's how it happens. They open, they rally, they love it, they hate it. They go back and say, I have no clue. Let's just close it about where it opened, and we'll decide later. And they decided to sell it. Then they come back. 1, 2, 3, 4, 5 dojis almost back to back in the same area. Clearly, they don't know what the fudge to do with this stock up here. So here's the strategy. Next time it bounces into 85 and 86, it's going to face a lot of selling. Into 87.50, if you're lucky to ride it all the way up to 88 and change, I would book the longs because onus is on the bulls, not because it cannot rally above that. Onus is on the bulls to prove that they can overtake all of this craziness. What is this? Pop, and then immediately let go of it and go straight down. Not a good candle. So it should face sellers on the way up. Okay. Why? Look left, this mountain of action. So these are the volume profile information that is available down here. The difference is these volume bars down here will tell me when the trading actually happened. Not very useful. These volume bars up here tell me at what level they happened. So instead of saying, oh, okay, on such a date, on January 8th, people traded it like crazy. This one tells me that, you know what? At 86, people loved it the most, and at 87.50. By loved it, I mean loved to trade it. Buying, selling, every buyer has a seller. So don't think that it's off the shelf. If somebody's selling it, somebody's buying it, so they're active. When they're active, it's like a traffic jam. So if the stock is rallying, trying to make a bounce, it hits the traffic jam, it's going to get log jammed. If it's falling into a traffic jam, like it tried to hold in the traffic jam area, see, and then it fell below it. Onus on the bulls is to get back above it. Otherwise, it's going to be overhead supply. That's my interpretation using a Wall Street term, which is I'm allergic to, overhead supply, meaning people are going to trade it. It's going to get busy. Buy, sell, buy, sell, buy, sell. Boom. It's going to hit a wall. It's going to be stuck like a magnet. So onus is on the bulls to work hard. They will need help of the market. They will need the help of their own conviction. And I'm not sure they have that much conviction. So we will see. Again, I don't have a short in it now. I wish I did, but I don't. The reason I did this video is because somebody in the chat room, linked down below to the chat room. It's not free, but it's free to try out. PayPal transaction is for $0 to get it started. You can cancel at any time in 10 days. So somebody asked me about shorting it. So I opined about, for them particularly, on how to do it. And I just shared my opinion on it right here. Nick signing out on Micron.